Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver and gold are definitely in the spotlight. There's a lot of speculation, there's a lot of controversy, and people are curious to see where precious metals are headed. This video is going to be showcasing, explaining, and breaking down where the price is going heading into next year. Right now you can see there is definitely a rally happening from that low $26 range up to nearly $28. So there's definitely a correction already starting to happen. How high will that go? I don't know yet. But this video isn't focused on the short term. We're looking more to next year. So I definitely have an article you guys will enjoy. With that said, make sure to smash that like button. Subscribe if you're new. I post daily videos, 2 to 3 videos a day, every single day, giving you the newest, latest, freshest, most up-to-date information in the world of precious metals. Let's jump into the video. So the shiny outlook for silver. The shiny outlook for silver. Silver remains bright despite the recent surge in prices. Market experts expect the safe haven asset to appreciate further on the back of aggressive monetary easing by central banks, a weaker US dollar, lower bond yields, and a further rally in the gold prices. So right there, off rip, they've already explained 4 or 5 different reasons why silver's going higher heading into next year. Sony Kamari, commodity strategist at ANZ, expects silver to move towards $28 per ounce this year and anticipates investor demand for the metal to sustain for the rest of 2020. Investor demand, by the way, is going to only keep rising for the next several years from solar panel, from the green energy revolution, especially with Joe Biden. We also have electric vehicles turning up, coming on the scene. Electric vehicles heavily need silver. We also have 5G technology, which is taking over globally. The 5G towers take silver. So silver isn't going anywhere. The demand isn't going anywhere. She is positive on the fundamentals of silver, with industrial demand from the solar and electronics sector recovering, as well as mine disruptions, which have led to the supply of the metal contracting by 7% this year. Already 7%. The silver price trajectory will largely depend on the sustainability of higher gold prices. Silver is gold's little brother. So when gold makes big moves, silver follows suit couple days, couple weeks afterwards into more extreme prices. So this is something that I think a lot of people overlook. Everyone focuses on gold, but you need to understand that silver does what gold does, but to just more extreme levels, to more profitable levels. How high silver prices go will largely depend on the performance of gold. Prices can potentially break past the $30 per ounce level if the gold rally sustains above $2,000 per ounce, and it's looking like it can do that in the coming months, especially years. Liquidity injections by governments, with feds pumping money into the economy, trying to keep everything afloat, have been stronger than during the 2008 global financial crisis. Back in 2008, they were pumping the economy full of money by the billions of dollars. Nowadays, with this pandemic, we're doing it by the trillions of dollars. So we are definitely at a more extreme point in the economy, and that's also going to point to more extreme prices in the precious metals world. So this was well reflected in the investment demand in silver inflows into exchange traded products, or ETPs, which have reached 272 million ounces so far, well above the inflows seen in 2009. However, a consolidation in gold price and a recovery in the global economy could take some shine off the silver metal. So let's talk about this for a second. Consolidation in gold price and a recovery in the global economy could take some shine off of the silver metal. Now, I disagree with this with this point. Let me break it down for you. Gold and silver are affected by different things. Gold is a monetary metal. So when the economy is in bad shape, like it is right now, everyone pours their money into gold and silver. More so gold because it's more of a safe haven. Banks have it. It's the mascot for precious metals. Silver, on the other hand, is also an industrial metal. So, yes, silver is also a safe haven, but it's also an industrial metal. So, when the economy is doing bad, people invest into silver and gold. When the economy is doing good, people also invest into silver. And silver is also used because silver's industrial purposes. We are advancing in a technological world, and silver being the most highly conductive metal for thermal conductivity and electricity is only making us need more and more silver. So a recovery in the global economy would actually help silver. That means more cars are being produced, more cell phone towers. All of this means they need silver to do all that. So silver rises when the economy's in good or bad shape. It's a win-win situation. Gold only recovers, or gold only flourishes when the economy's in bad shape. Silver flourishes when the economy's in good or bad shape. Investor demand for silver has been stronger as well. With silver exchange traded funds, or ETFs, holdings have seen a sharp rise since March. Well, obviously since March, we saw $11 silver in March, and the gold to silver ratio was 125 to 1. So we expect the demand to hold up well for the rest of the year. Gold has been in the spotlight in recent weeks for reaching record high prices, breaching the $2,000 threshold on August 5th. Its less popular sibling, spot silver, has also seen an increase in price, which has more than doubled from its low $11.74 an ounce in mid-March to $26.46 as of August 5th. In fact, silver has outperformed the yellow metal over the past month in terms of returns. For the month leading up to August 5th, silver managed to gain 42%, more than triple that of gold's 12%. So silver has a lot of catching up to do, and it's looking like the numbers show that silver already has caught up a lot, but there's still more room to run, believe it or not. Jeffrey Halley, senior market analyst at Oanda, believes that silver prices have the potential to move beyond $30 per ounce this month, and that the gold to silver ratio will provide clues to the outlook for silver prices. Silver prices will derive from the gold to silver ratio. If the gold to silver ratio is going down, by default, investors are selling gold and buying silver. If silver is not overbought, quid pro quo, the ratio can go lower, further boosting silver prices, he explains. So let me break this down for you. So the gold to silver ratio is a great tool to see which metal of the two is the better buy or has the more potential. When the gold to silver ratio is high, that means that gold is overpriced or silver is underpriced. And that also means that silver more than likely is going to start outperforming gold, because at the ratio that high, that means gold has been outperforming silver. But with the ratio so high, we know it has to start normalizing back down, meaning that silver is going to start outpacing gold. Silver will be more profitable. So the ratio reverted from 128 to 1 in March all the way to 80 to 1 today, making it one of the best trades for 2020. The ratio still has further to fall, meaning that silver is going to start, or is going to continue to outpace gold before we can say it's fairly priced, right? The ratio is still 80 to 1, but some speculate it can go all the way down to 50 to 1 or even lower. I mean, it comes out of the ground 8 to 1, so what's keeping it from that? All could fall much before becoming oversold. That would mean silver has been overbought. So as long as the US dollar remains weak and interest rates stay in the deep freeze, silver can move higher, but only as long as gold continues to do so. I don't like this article that much as I keep reading it. They are missing a lot of key points. This is the first time, I think, in history on my channel where I'm reading an article, and the more I read it, the more I disagree with it. This is awkward, but I'm glad. I'm gonna keep this video. I want you guys. I want to share my true opinion, and it's okay to disagree with points. I just think there's more to the story than they're bringing. I think there's a lot more context than the article's mentioning, which it's okay. I've never even heard of this site, the edgemarkets.com. You know, I read the first couple paragraphs and it caught my attention, and I liked the way they broke it down, but still they're missing some key points. Not to say it's a bad article. I don't want to say that because it's an incredible article, but they're just missing some of the points that I'll point out for you guys. So silver and gold do move similar to each other. They move similar to each other, right? But they are not the same metal. Gold is used more for jewelry, more for coinage, more for bars. That's also why gold is recycled, remelted, rescrapped, reused. So a lot of gold is recirculated in on a global scale. Silver, since it's so finely intertwined with technology, a lot of silver is lost. It's lost in technology. Nobody's scrapping out silver out of cell phones or laptops because silver is not profitable to do so. You'll get a couple pennies for spending hours taking it out of a laptop. They do that with gold, though. Trust me, I've done it. I've taken cell phones out of gold because that's profitable, because gold is much more expensive than silver is. So to say that silver's price is solely based off of what gold does is silly. Look at what's happening right now. Gold wasn't doing that hot, and silver outpaced gold by what? It was 128 to 1. Now it's 80 to 1 and still going lower. So you're saying that that's because of gold? No, that's because the silver has other uses outside of gold. I really hope this person understands that. I really hope, because us silver stack, that's like saying that silver stackers are pointless. We might as well just buy gold, because if whatever silver moves, whatever pace silver moves at, it's going to do with gold. My name isn't Gold Slayer. My name is Silver Slayer, because silver has more opportunity, more potential. And they're even looking at it. They're saying it, but they're not seeing. They even mention how the gold to silver ratio is lowering down, but they don't see it. They don't. It's crazy. It's actually crazy. Not trying to hit on this article at all. It just is kind of interesting, quote unquote interesting, why they're saying some of these things. So to get to $30, silver is likely to follow on the coattails of gold prices, which has more enduring upsides from current levels, notably on the back of the unprecedented global monetary easing. Rising silver is typically more dependent on a weaker US dollar, which is true. Rising gold prices and a rising stock market, all of which are less certain than the central bank's monetary easing policies, which serve as the foundation for gold prices. So yes and no. I mean, so yes, when the dollar index is high, precious metals are low, and vice versa. And a rising stock market or stock market volatility can affect precious metals prices. A lot of people take money out of stocks, put them into precious metals, and vice versa. But it even says, over the past few months, the increase in silver price has been driven by low bond yields and aggressive global monetary easing. We are pumping the economy full of money. It's making the dollar worthless, oversaturated, and it's also pushing precious metals prices higher in what the gold to US dollar ratio is, or the worth, or the value. The US Treasury real yields curve, rates adjusted for inflation, is now negative all the way out to 30 years. Although silver pays no yields, 0% is still better than negative 0.5%. So let's kind of jump around here. So however, Halley argues that the elevated gold prices are not the main reason for the rally in silver prices. Thank you. At least this guy says that. At least Halley, the person not writing this article, this was a quote from Halley, says that. When this person up here just said it's solely driven from gold prices. Such price action in silver is down to liquidity. Liquidity, value. There is simply a lot less of it in the international futures market, where most of the trading in silver takes place. See, silver is a much smaller market than gold is. A lot smaller, which means any type of money going into silver is going to affect the prices. That's how people try to corner the silver markets, like the Hunt brothers and people have tried to in the past, like JP Morgan was spoofing. So let's try to find a summary. So let's go down here. Okay, so this is the end of the article. So for retail investors who are interested in adding silver to portfolios, INS recommends via silver ATC. No. So I'm glad I found this article. I'm glad I made this video, but I don't agree with a lot of it. Invest into the real physical gold and silver. If you can't hold it, you don't own it. They even show a picture of physical silver up here, but then at the end of the article, in their summary, they say ETFs are the way to go. ETFs is like investing into the stock market for precious metals. You're missing the whole point. The whole point is to be in complete control of your money, not your gold and silver held in some vault halfway across the world with a custodian's name that you never heard of. Right? You don't want a third party into holding your gold and silver, because what if an emergency comes up? What if there's an emergency situation with times this crazy? Who knows when you need to access your gold and silver, your hard-earned money, and what you're gonna fly across the world real quick, grab it, and then come back home. And by the time, it doesn't make sense. It just doesn't make sense. The real money, the real value, the intrinsic value of silver is where the price lies. That's the value of it. It's regardless of who says my coin is worth what, it's irrelevant, because the real value of the coin isn't the spot price attached to it, it's the metal content inside of it. I hope you guys understand that, and I just hope you guys also see what I'm saying and understand it, because it's very important. Right? This person is probably, well, whoever wrote this that was missing out on those points is at a huge disadvantage from an investor standpoint, because they're missing some huge points, and they could throw off their strategy widely if they even stack silver, which they probably don't. Right? They probably don't, and that's why, But anyways, I hope you enjoyed this video. At least found it funny. I definitely think this is one of my funnier videos. This has never happened before. Usually I agree with most of the points, and I'll add on more points, off of their points. But this was the first time I've just solely been like, no, I don't like it. But anyways, I hope you enjoyed this video. Make sure to smash the like button if you enjoyed this video. If you thought this was educational, informational, or at least just entertaining, make sure to smash that like button. Subscribe if you're new, because I post daily videos. This was Silver Slayer. Thank you for tuning in. I'll see you guys soon. Peace.